If you're paying business expenses out of your own pocket and not getting reimbursed, then you're losing money. This is one of the biggest and simplest mistakes that business owners make, and it's 100% fixable. Today, I'm going to show you exactly which of your personal expenses are actually business expenses and how to reimburse them tax-free through your accountable plan. Hey everyone, welcome to episode 5, the final chapter in our accountable plan mini-series. I'm Mike, CPA, co-founder of Ledgerly, alongside my partner in crime, Andrew D'Amico. And thus far, what we have covered in this mini-series is the accountable plan and what it is, the home office and the Augusta Rule, auto deductions, and our board of advisors. Now, we're going to finish strong with the episode that everyone needs to hear, because this is where most business owners are just bleeding money out of the business, out-of-pocket expenses. So here's the reality. Most business owners buy things personally, tools, software, subscription, you name it, and they never get reimbursed. And here's the real issue. If the business doesn't reimburse you, you either lose the deduction or worse, you could end up double taxed. The IRS expects reimbursements through a compliant system, especially for S corporations. And that's where the accountable plan all comes together. So the IRS has some pretty strict rules, and they're not rocket science. Expenses need to be ordinary and necessary in order to be tax deductible for your business under IRS code 162. A business expense is deductible if it's ordinary. Is it common in your industry? Or if it's necessary? Is it helpful for you to generate revenue in your company? And as you can see, we have some examples of what these ordinary and necessary business expenses are. Cell phones, laptops, cameras, printers, tools, supplies, software, meals, travel, you name it, the list goes on. However, not all of these expenses wind up on your business debit card or your business credit card. Sometimes they're on your personal card. So categories of out-of-pocket expenses you can reimburse, like tools, supplies, and equipment. Again, computers, monitors, phones, cameras, office chairs. If they're used for the business and you're paying personally for them, you document them and you reimburse them. Or software and subscriptions like QuickBooks, Google Workspace, Adobe, different CRMs, professional training modules. Again, all deductible if ordinary and necessary for your business operations. Also, travels. When traveling for legitimate business purposes, crap, I forgot my business card, you have to pay them personally. Flights, airfare, car rentals, hotels, ride shares, baggage fees. Again, all reimbursable if documented properly under the accountable plan. The list goes on, people. Business meals. As long as you are conducting business and you are present, business is discussed, the receipt is kept, and the documentation is there, then we will reimburse it through the accountable plan. This list keeps going on. Continuing education, courses, books, conferences. Again, if you're using your personal credit card or personal debit card and you are documenting it correctly, then they are 100% reimbursable. Now, full disclosure, these are all expenses that we should be paying through our business. Yep, you forget your card, you got to use your personal card here and there. As long as the documentation is there, we can reimburse them. However, as we covered in episodes 2 and 3 with the home office and the auto, most of those we're paying personally. So that's where this comes into play. We need to make sure our home office is documented through the accountable plan with every detail along with the auto. Again, expenses that we are probably paying for personally other than our business. Same thing with the Augusta Rule. We want to make sure that we are documenting any out-of-pocket personal expenses related to your home that you are renting out to your business. So rule of thumb, this video might not even be applicable for you watching it because you're already doing the right thing and paying with your business cards for those ordinary and necessary expenses for your business. Outside of that is where the home office comes into play, the auto comes into play, and the Augusta Rule. Those are things that you're most likely paying for personally. That's why we have the accountable plan. But in the event that we do need to use our personal card for those business expenses, here's the process for reimbursement. So you're paying the expense personally. Then what we need to do is document it. Do we have the receipt? Do we have the date? Do we have the dollar amount? And what was the expense for? What was the business purpose behind it? Once you have that all together, you put it in your spreadsheet that us at Ledgerly will provide to you. You put it in the spreadsheet, you reimburse yourself from the business. Your business gets a tax deduction and you get that reimbursement tax-free. And if it's an S corporation, that S corporation expense will go on other deductions on your 1120S tax return. Now, take a step back. This reimbursement process is the exact reason why the accountable plan exists. This reimbursement process, this 4 lines on this whiteboard, is why it all connects together. This is the process to document and reimburse yourself correctly. All right, so let's follow this up with a real life example here. So let's say we're paying the following expenses personally. We got a new laptop, we got a new office chair, software subscriptions, business meals, travel for your board of advisors meeting. That's a total of $3,750 of reimbursable expenses. If reimbursed through your accountable plan, you get $3,750 tax-free reimbursement, business tax deduction of the full amount. If not reimbursed, you're losing out. You're losing out on that deduction. Now, if you're in a, let's say a total weighted average between everything, let's say you're in a 30% tax bracket, like boom, you're missing out on that deduction right there. You're missing out on $1,100, okay? So very important, we need to make sure we're crossing our T's, dotting our I's. So what's our plan of attack with this? Step 1, review your personal bank statements and your personal credit cards for business expenses. I'm telling you, you'll be shocked of what you actually missed during the year. Step 2, organize those transactions, organize those receipts into categories as we discussed above: tools, software, travel, education, etc. Number 3, complete the reimbursement. Complete it from your business account. Make sure that you are documenting it and you are doing the reimbursements either on a monthly, quarterly, semi-annually, annual basis. Number 4, you're going to cut yourself the actual payment. It's going to go through your business account. The business gets the tax deduction and you get a tax-free reimbursement. Number 5, file everything with your S corporation. Make sure you're not piercing that corporate veil. Make sure you have the documentation, the audit defense, the proofing. The proof is in the pudding, people, and the pudding is the accountable plan. And with that said, that completes our 5-part mini series on the accountable plan. If you want Ledgerly to implement your full reimbursement system or anything regarding the accountable plan, make sure you are getting in touch with us, booking calls. Let's make sure that you are ready for year end and that there are no deductions left on the table for you. So again, thank you so much for watching this mini series. And for more strategy-focused deep dives on compliance, asset protection, and overall tax strategies, that's what we're here for. Make sure you hit that subscribe button and stay tuned for weekly videos and mini series just like these. Take care, guys.